My name's TradeX. I'm the founder of Red Pill Trading, also the creator of X levels, which are my interpretation of the now infamous ICT's Enigma. This is the principle that price moves from a premium to a discount as it searches for inefficiencies and liquidity in price. X levels are percentages with inside of a dealing range that allows you to determine which PDRA to frame your entry on. In this episode, I'm going to show you exactly how X levels relate to ICT's famous logo. And I'll also show you exactly how you can start utilizing that information for your own benefit. At the end of this video, I'm also going to show you how you can get involved with our new indicator, which is coming to TradingView in February. Over 100 traders now utilize X levels, and the amount of traders using X levels daily is growing considerably. So make sure you stay to the end of this video and you'll be able to register your interest, become one of the first traders globally to utilize the new X levels TradingView indicator. Until next time, guys, trade safe, trade smart, and I'll see you very, very soon. So what we can see here is we have a swing high and a swing low. This is a dealing range. What makes it specific to X levels is that it is a swing high which put in a new low which closed below a former low. A 3-candle formation, this swing high, which puts in a new low which closes below a former low, validates a new dealing range. If we look at our previous dealing range, and this is a 15-minute chart, by the way, this was our previous dealing range. However, when this swing high put in a new low that closed below this low, it validated our new X level dealing range. Now, the most important part of X levels is this, and it's the understanding that any single dealing range, whether it is a 15-minute, 5-minute, hourly, 1 minute, it doesn't matter. Whether it is bearish or bullish, doesn't matter. What defines an X level dealing range is the principle that there is a premium and discount side of every single dealing range, whether it is a bullish or bearish dealing range. On this 15-minute dealing range, which is a bearish 15-minute dealing range, we have a premium and a discount side, and you would utilize this on any time frame. Inside that dealing range, anything below 50% is regarded as a discount. Anything above 50% is regarded as a premium. 12% in a discount is considered as a deep discount. 21, 29.5 and 38 are your optimum trade entry for a discount. 50% is equilibrium. 62, 70.5 and 79 are your optimum trade entry for a premium, and 88 is your extreme premium. Now we can utilize this same principle on any time frame. So if we jump down to the 5-minute, so as you can see here, we're utilizing the X level dealing range that is going to be available on TradingView in February. This will automatically populate the dealing ranges for you, so you don't have to draw them manually. But it is important that you understand how to define a dealing range. So this swing high, which put in this low, which closed below this low, is our 5-minute dealing range. So this 3-candle formation closing below that low creates our 5-minute dealing range. So you can see the same principle. We have a discount 12, 21, 29, 38 in the discount side, and we have the premium side 62, 70.5, 79, 88, and the 5-minute high. Now, why this is important to know is because with X levels, what we're always trying to achieve is to enter at a higher time frame point of interest in an alignment with a macro. The principles of X levels is as follows, and this will make sense with ICT's logo in a minute, but this low would be a higher time frame point of interest on a higher time frame than a 15-minute, whether that's the hourly, daily, or weekly. You want to frame an X level around this point of interest in alignment with a macro at a PDRA. Once you have that, you are then looking for price to go back through the X level dealing range as it moves between a discount and a premium. Here we can see that we have a 1-minute dealing range. So if I put the X level dealing range over this 1 minute, you can see how it works on any time frame. We have the 1-minute high and the low dealing range. Discount side, premium side of this 1-minute dealing range from a high time frame point of interest. Then we're looking for price to expand out to take out the 1 minute. Once it's done that, we are then looking for range expansion. The next dealing range from our 1 minute is our 5 minute. If we're looking to take price up, we can start now utilizing these higher time frame POIs again to align with lower time frame PDRAs. Here at 12% on the 15-minute X level, we can see that we have an order block with propulsion blocks after a break of structure on the 1 after a 2 p.m. reversal using the 2 p.m. macro. What do? So we break the 1, we go up to fair value on the 5 minute. So these dotted lines are the 5 minute, these solid lines are the 15, which is also 29.5% on the 15 discount side. We come all the way back down to a discount, discount 5, discount 15, discount 5, discount 15, all the way up to a premium 70.5 on the 5 minute. We then come back down to a discount fair value on the 5, but a discount of the 15, ultimately looking for price to drive up towards deep premium on the 5, and then ultimately the 5 minute liquidity. Beyond the 5 minute liquidity, you're then going to look into your 15 minute premium. Price has gone from a discount on the lower time frame, broke the 1, goes into a 5 minute premium, breaks the 5 into a 15 minute premium, moving between a premium and a discount as it does that. So if we go to the higher time frame, this top left hand chart is my monthly, weekly, daily. We can see that from here we were at 29.5 on the premium side of the weekly dealing range. When price is extremely bullish, it can go out the premium side of a higher time frame dealing range. But what we could start doing is utilizing 29.5 on the premium side of the weekly and see if we have a PD rate in line with a macro that we can trade off. Well, inside of here, we could utilize the principle of a wick behind a BISI being classic support and resistance. It's a well-known ICT concept. Combine that with being at a 2 p.m. macro for a 2 p.m. reversal, we could start utilizing this information. Going from a higher time frame POI on the weekly and then driving price back through the dealing ranges as we search for two things: inefficiency and liquidity. So the first thing we're going to look for is a 1 minute break of market structure, premium discount. Then we're going to consider where is the 5 minute premium seeking inefficiencies. Then we're going to go and search for liquidity above the 5. Beyond the 5, we're going to seek for inefficiencies. Then we're going to search for 15 minute liquidity. That's our next DR. At which point you'd want to start considering your hourly, right? So after your 15, it's your hourly. So this hourly dealing range, you can see that we're still just inside of a discount on the hourly. However, if we got up into a 15 minute premium or even take out the liquidity on the 15, we find ourselves back inside of a higher time frame premium. So again, this is where you could start aligning with your principles of ICT. This would be back inside of an inverted fair value gap on the hourly. So that's an overview of how X level works. It goes into far more depth and detail than that. I teach that inside of Red Pill University. Just follow the links within my website, and if you do decide to join, I'll see you on the other side. But for now, let's go and have a look at ICT's logo and make sense of that. If you're an ICT trader, you'll understand what this logo is. It's the infamous ICT logo, which has an air of mystery around it, as he often alludes to it being very closely aligned to the Enigma, which is the principle that price is delivered algorithmically. This is our PD rate inside of a higher time frame point of interest. We are going to look for our 1 minute dealing range, and then we're going to look for it to expand back out into the 5, into the 15, into the hourly, into the daily, into the weekly, into the monthly. Okay, so what happens is as price leaves your higher time frame POI, it goes discount, premium, break, 5 minute, discount, premium, break, 15, discount, offset accumulation, potentially back up into a 15 minute premium, down into a daily discount, back up into fair value potentially, down into a weekly discount, monthly, higher time frame POI. Here we could start looking for it to reverse back out, 1 minute, 5 minute, 15. The core principles of ICT, and they are that price moves from a premium to a discount, searching for inefficiencies and liquidity. As we move between these dealing ranges, these X level dealing ranges, price is doing one of two things. It's searching for inefficiencies and liquidity. Inefficiencies, liquidity, inefficiencies, liquidity, inefficiencies, liquidity. As price goes from a higher time frame POI, we break 1 minute, 5 minute discount, inefficiency. Then we take liquidity below the 5 minute. Then we go into a 15 minute discount. Then we break 15 minute liquidity. Then we go potentially offset, accumulate into a 15 prem. Then we break hourly liquidity. And then once we get down into a higher time frame POI, whether that's a turtle soup on liquidity into an inefficiency, that's where we can start anticipating a reversal in price. So imagine price comes all the way back down to the liquidity on the hourly, higher time frame POI, and then we expand back out through the dealing ranges up into a discount of the daily, at which point we then expand back out through the dealing ranges. To learn more about the X levels indicator and the X levels themselves, make sure you come to the website and click register. You'll be sent how-to guides, PDFs on what the dealing ranges are and how to define them, the percentages within, as we run up into the launch for the indicator release on TradingView. So come over to the website, click register, and you will be one of the first to utilize this indicator on launch day. There you have it, guys. I hope you found that video insightful. If you have any questions, follow the links below and you can jump into Red Pill Trading's Discord entirely and utterly free. You'll be able to ask me any questions you have in there and also get involved with our community. Until next time, guys, trade safe, trade smart, and I'll see you on the next episode. Abosh.